Social Security recently announced their cost of living adjustment for 2024, as well as changes to Medicare. And in this video, I want to take you through those changes and talk about how they might impact you. Welcome back. This is episode 172. In this week's podcast, I'm going to address the recent announcement from Social Security regarding the 2024 cost of living adjustment, as well as changes to Medicare Part B premiums for 2024. So Social Security benefit checks will be going up by 3.2% beginning January of 2024. And this is less than last year's 8.7% increase in cost of living adjustments for last year. But this is higher than the historical average of 2.8% since cost of living adjustments have been offered. And Social Security measures the CPIW, and that is the Consumer Price Index for urban wage earners and clerical workers, to determine if a cost of living adjustment will be granted. And they take the average of the third quarter and compare that to the average of the third quarter for the previous year. So they measure July, August, and September compared to July, August, and September numbers for CPIW for the prior year. And that is what the change worked out for this year. And Social Security made it clear in their press release that it's not necessary to call Social Security right away to do anything. Beneficiaries will be notified by mail in early December as far as what their new monthly benefit amount will be. That is, people that are receiving Social Security. And if you would like to receive this information faster, then you can go to Social Security's website, ssa.gov, and either log into your account or create an account if you don't have one. And then you can sign up for email or text notifications. And then you will get an alert when the COLA announcement has been posted as a message into your account. They also noted that Social Security, since 1972, has been calculating cost of living adjustments based on changes in the CPIW index. And prior to 1972, any increases in benefits needed to be authorized by Congress. And when that change was made in 1972, inflation was very high at the time in the 1970s, and there was a 3% minimum rule that was enacted. So this required that there had to be at least a 3% increase in the change year over year in CPIW to actually receive a cost of living adjustment. And this worked fine initially, but by the 1980s, inflation had lessened, and the 3% rule was getting harder to actually overcome. So in 1986, the 3% rule or 3% trigger was eliminated, and we went to how it's measured now, which requires just a 0.1% increase in the CPIW to trigger a Social Security cost of living adjustment. And if you're not already collecting Social Security, those benefits, that COLA will be factored into your benefits. And also, anyone age 62 and older who's not yet started receiving benefits, because you're actually eligible at age 62, you will also get this COLA, but it's not going to show up directly on your statement. Rather, that when you actually apply for your Social Security benefit, the way that the calculation is done, that cost of living adjustment will be factored in to your benefit to determine what you're actually going to receive. And that is on top of any delayed credits, meaning that you can collect Social Security at 62 and wait all the way to 70, but the longer you wait, the more that your benefit grows, and this grows monthly. So by waiting, the benefit will be higher, as well as any cost of living adjustments that will be applied. Now, as I mentioned before, there's also a change to Medicare Part B premiums for anyone that has enrolled in Medicare or will be enrolling in Medicare in 2024. And the Medicare Part B has a base premium, which is the minimum amount that everyone has to pay per month. And in 2023, that number was currently $164.90 per month, and that amount will be increasing to $174.70 per month. Now, this is an increase of $9.80. And if you remember last year, if you're currently on Social Security, you're probably aware that last year there was actually a slight decrease in the Part B premium, and it went down from the prior year of $170.10 to $164.90. Additionally, there's something called an IRMA charge, which could apply to your Medicare Part B premium. And IRMA stands for Medicare Income Related Monthly Adjustment Amount. And this is an additional amount of money that some people have to pay on top of their base Part B premium for their Medicare Part B every month. And that will range from an additional increase of $69.90 all the way up to $419.30. And this is also an increase over 2023 levels. Now, there's also an increase on the amount of income that will trigger IRMA. And remember, IRMA is based on your most recently filed tax return, meaning your 2022 tax return will be used to determine your Medicare premium for 2024. And for single filers, if your income was over $103,000 in 2022, and for married couples filing jointly, if your income was over $206,000, that will trigger IRMA. And this means you'll have to pay more for Part B premium. And there's additional triggers from there. And this is a slight increase from 2022 levels. And where the first tiers based off your 2021 tax return, I should say 2023 levels, which were based on your 2021 tax return, were just $97,000 and $194,000 for couples. For those listening, consider heading over to retirewithryan.com, where you can read my recent blog on the 2024 IRMA income amounts. But for those watching, I'm sharing a snapshot of what those numbers look like. So you can see we have for filing as an individual or filing as someone, a married couple filing jointly, and the Part B premium starts at $174.70. But if you go over the $103,000 or $206,000, your premium goes up to $244.60. If you then go over the next threshold for a married couple filing jointly of $258,000, your premium would go up to $349 a month. And for a single individual, if you go over $129,000, it then also goes up to $349 a month. So the premiums do go up. So keep in mind that you want to keep an eye on your income, and if possible, you can keep your income below this level. That's something you want to try to do. There might be certain years where that's not likely. And I also have another blog post that talks more about how you can things you can do to combat IRMA. This also can apply if you're on a prescription drug Part D plan. So if you're on original Medicare with a Medigap plan, you're on a Part D prescription drug plan, and you can see that there's also an additional monthly surcharge that you have to pay for your Part D premium as well if you are over these income-related monthly adjustment income amounts as well. There's also an increase in the Social Security wage base, and that is the maximum amount of wages that are subject to Social Security taxes. And that number is rising this year to $168,600 from last year's wage base of $160,200. This is about a 5.25% increase. There's nothing you need to do, but just be aware if you're someone who makes more than this amount of money, you're going to pay some more money into Social Security, as well as your employer will pay more money. And so, additionally, the retirement earnings test exempt amount also rises to $22,300 from $21,240, or $1,860 per month. So remember, if you decide to collect Social Security early, that is before your full retirement age, you're limited to how much you can earn until the year that you reach your full retirement age. So between 60 and let's say your full retirement is 67. So between 60 and the year that you're going to turn 67, if you earn more than $22,320, every dollar you earn over that, you see a $1 reduction in your Social Security benefit for every $2 you make over that. So that's definitely something to think about if you're going to collect Social Security early and work part-time, that you're limited to how much money you can earn. Now, starting in the year that you reach full retirement, so let's say your birthday's in July, in which you'll turn 67. Starting on January 1 of the year that you turn 67, you actually can earn up to $59,520 or $4,960 a month. And if you earn above that $59,000, then your benefit is reduced $1 for every $3 you make over that. So that's an increase also over last year's number of $56,520. And beginning in the month you reach full retirement, there's no limit to how much you can earn and collect your Social Security benefits. Consider checking out one of my past blog posts on how much you can earn and things you can do with collecting Social Security benefits early. Now, I also want to address a listener question that I addressed last year, but I think it's very relevant. And this listener wrote in that he will be separated from service in late November, and he's being offered COBRA insurance paid for by his company for 6 months. And he and his wife are both 67, and he's wondering if it's better for them to go on COBRA since it's being offered for free or to sign up for Medicare. He's wondering if COBRA is creditable coverage for he and his wife not enrolling in Medicare. His wife is covered under this plan and has disabilities and is wondering if they could be restricted from signing up for a Medicare supplemental plan or face Medicare penalties. So taking COBRA for 6 months would not be a problem, but COBRA you can keep up to 18 months. And if he did that without enrolling in Medicare, that would be a big problem. And the reason is that if you lose creditable coverage past age 65, you retire or get laid off, you have 8 months to enroll in Medicare, or you'll have to pay a Medicare penalty for life, as well as you might be prevented in certain states from going into a Medigap plan. And with his wife having disabilities, those disabilities, I'm not sure what they are, could prevent her from going in a Medigap plan, and that might be better coverage for her than a Medicare Advantage plan. So it'd be okay to go on this for a little while, but then make sure that you sign up for Medicare within the 8 months, because if you don't do that, then you'll be restricted to signing up for Medicare during the general enrollment period, which runs January 1st to March 31st, and you might have a gap in coverage. So you'd want to enroll in Medicare before the coverage ends, definitely within the 8 months, and make sure you have your supplemental plan and your drug plan lined up so that there won't be any lapse in coverage, and you will have the right plan that's going to cover you and also be covering your medical issues, whatever they might be. So I hope that gives you an update on Social Security as far as the changes, Medicare Part B changes, and you'll be getting these updates from Social Security as well as a letter in the mail from Medicare letting you know what your Part B premium is. And there are some ways that you can appeal your Part B premium increase. And also, if you head over to retirewithryan.com, you can check out my blog post on how to appeal Medicare Part B premium increases. Have a great week, and I look forward to talking with you next Wednesday. Take care.